John Hitchens, he joins me in the studio. John, thanks for coming in. Let's talk about these declining volumes, and should we be worried?
Well, I think what we're seeing in this survey, it's the CBA Financial Services Survey, is that although the industry is a little more confident again this quarter, the outlook in the short term is that volumes are going to continue to decline. The medium-term indicators, though, in the survey are that there's a degree of optimism about the medium term. So I think that what we're saying is we're bumping along the bottom.
But we were almost out of the woods, it seemed, 6 months ago in the last survey.
Well, only in certain sectors. I think if you go back 6 months ago, the banking sector was still quite pessimistic. It only started to see its confidence grow about 3 months ago. There's a very telling question, I think, in the survey about the number of percentage of respondents who think that the situation could get worse. That's the one that's changed in this survey for the first time. The percentage saying things could get worse is now quite low.
Well, that's perhaps something to get some encouragement out of anyway. But overall as well, if we look at the various parts of the financial services industry, where are we seeing the most positivity and where is the least and the most bearishness?
The biggest degree of optimism is with the fund managers. And I think that's fairly easy to explain because they've seen...
Are they expecting equity markets to behave like they did in 2009, one assumes?
Yes, and also with interest rates very low at the moment, of course, they are competing very effectively against the banks for savings.
And the worst?
And the worst one is actually probably the banks, still the banks, because although their optimism has increased, they have the highest predictions of a fall in volumes in the short term.
Yeah, insurers as well, they're in this survey, obviously they're part of financial services companies, and how are they viewing things?
It's a bit mixed in the insurance industry. The general insurers had a very good year last year, and they don't think 2010 is going to be quite so good. For one thing, there were no major natural disasters in 2009, and so 2010 can't get any better than that.
And this weather we're having as well is going to take its toll to some
That will
extent.
certainly cost them something in terms of burst pipes and so on, yeah. Life insurers is a bit more mixed. They've seen a boom in markets, but they're a bit worried about the cost of regulation, particularly the Solvency II legislation that's coming down towards them.
Is that one of those things which is perhaps the elephant in the room, which is just making everybody just lack that little bit of confidence?
Absolutely. I mean, in the case of the banks, they're clearly going to have to hold a lot more capital. That will impact their returns. And the insurers have a major upheaval in their capital structure with Solvency II coming.
What is the election this year? Well, how does that play into all this?
I think it just increases uncertainty. The predictions are that the opposition could win, but it's far from a given. I think the financial services industry really wants some clarity about what's going to happen. A lot of the regulatory proposals at the moment are still, well, this is what we might do, and so on.
It's all up in the air.
Yeah, it's all up in the air.
And nobody likes uncertainty, do they?
Absolutely.
What about London's position as a financial centre, a global financial centre? Was there any thing on that in this
Yes,
survey?
we did. We asked respondents how they felt London's position was, and there was a big jump in the number of people who are now worried that London's competitiveness has been damaged by the crisis. And in particular, I think underlying that is there is a concern that London is reacting faster than some of the other centres in increasing capital for the industry. And there is a worry that we may actually be moving ahead of where the others will actually even get to.
Oh, really? OK. Well, with that in mind, you get also a view as to what the customers of banks, etc., are doing out there. Obviously, that's fundamental to all this. And, what about the economy, the real economy itself?
Well, the problem, I think, is the customers are also affected by this uncertainty. People just simply don't know, should I buy a unit trust, should I leave my money in the bank, or whatever at the moment. And I think uncertainty is affecting everything. Right,
and why buy now, or why invest now rather than later, I suppose, is one of those key things too.
Yes, I mean, most surveys are saying sort of about 2/3 of people expect the stock market to rise or stay flat, but about 1/3 think it's going to fall, and that's quite a big third.
John, thank you so much for joining us.
Cheers.
John Hitchens there. He's from PricewaterhouseCoopers.